Hi, this is Merrill with Tax Tutor. I wanted to talk a little bit about how business owners can pay no tax in 2021. If you like this video, please hit the like and subscribe button below. So I recognize that that's a little bit of a clickbaity title, Pay No Tax in 2021 for business owners, but there is a way that you can pay no tax in 2021 and pay no tax any year, really. You could pick any year and not pay tax in that year. The thing to realize that just about any amount of income is going to be taxed. So if you don't want to pay any taxes, you need to either get rid of your income, have zero income. If you have no income, you would not pay tax. Or if you increase your business expenses, you don't pay tax either doing that. So when your expenses are greater than your income, then you have no income to be taxed on in that year. Now, that might be a little difficult to do because obviously those expenses have to come from somewhere. So either you're getting a loan or you're putting cash in the business or doing something. But if there's a year that you don't want to pay taxes, or if there's a year that you're making a lot of improvements or doing a lot of things, then that could drive your expenses up and not pay any taxes on that income. One area that people use to reduce their taxes quite a bit is by buying business assets. So what types of business assets are we talking about? Well, it kind of depends on how much income you have and how much cash you have, or how much debt you can or want to go into in order to save money on taxes. So some examples of business assets are vehicles. So I have a number of clients that maybe in a particular year they don't want to pay taxes that year, or they recognize they need a new truck or a new car or something along those lines. The vehicle write-off works better with very heavy vehicles. There's an incentive in the tax code to buy vehicles that are over 6,000 pounds. So you see a lot of business owners that will go and buy really big trucks that are over 6,000 pounds because those aren't subject to limits, to depreciation limits, and they can write those off fully. So if they have $100,000 of income during the year and they go and buy, say, an $80,000 truck, that's going to offset $80,000 of their income, and they'll end up being taxed on $20,000, which if you factor in other personal deductions and things like that, probably gets them down to zero and they pay no tax in that year. They could go and get a loan for that truck, and then they wouldn't have to come up with the cash to pay it. The downside there is if you go and get a loan to buy your truck and then go and buy that truck and take a deduction for the full amount of that truck in the year that you purchase it, you get this great tax write-off in one year, but the rest of that life of that loan, you're going to be making loan payments, and you won't get any deductions for those loan payments, at least the principal part. You will get deductions for the interest that you pay on the vehicle, but not for the principal, because you've already deducted the principal as depreciation in the year that you purchased it. Another thing that requires that to work is that vehicle has to be used 100% for business, or at least 50%. Once you go under 50% of use for a vehicle, you cannot depreciate it, or 50% of business use cannot be depreciated. So the vehicle has to be used greater than 50% for business, and then you can only deduct the percentage that you actually use for business, which requires you to keep mileage logs and keep track of the percentage that you use it for business. So if you buy a new truck in a year, you keep those mileage logs, and you use that vehicle 80% for business, then you'd get an 80% write-off. So if the vehicle is, say, a $100,000 vehicle, $100,000 truck, you'd get an $80,000 write-off for that vehicle. 80% of that would be written off. What about other assets that could be written off? Well, I know people that were looking at a very large tax bill, and they decided, you know what, rather than pay taxes, we're going to buy an airplane. So if you buy an airplane, again, it has to be a business asset. You can't just go out and buy an airplane to fly around and do things personally. It has to be justifiable and used in the business. You have to show a business use. If you get audited by the IRS, they're going to be all over that asset and making sure that it's business use. So you're going to have to keep logs of where you flew it, what you did with it, who was with you, and all that sort of stuff, because they're going to be really, really looking for any personal use of that to try to disallow that deduction. So keep very good logs and show how that airplane is used for business use. Another really large asset that I've seen people buy and use to help save money on taxes is boats or yachts, big yachts, right? So I know somebody who went and bought a yacht. They were facing a really large tax bill, had a lot of income, so they went and bought a $2 million yacht, and they turned it into a business asset. They host people to come on that yacht, and they give them business advice and counseling and help. And so that turned that yacht into a business asset and enabled that business owner to write off that yacht, a big $2 million deduction in 1 year, which helps save all sorts of money on taxes. There could be, a more practical example that would apply to more people would be if you were to buy a building. So let's say that you operate your company, you're looking at buying a building, buying the location that you operate out of. So you could go and buy a building, and there's a special deduction that comes along with buildings that are called a cost segregation. And a cost segregation goes in and segregates out the components of a building and puts them into shorter lives. So usually when you buy a commercial building, we'll say in this case, since it's used for business, a commercial building is depreciated over 39 years. So if you can break up the components of that building, say if you have carpet and fixtures and other things inside that building, then you could break those components up and depreciate those a lot faster and get a much bigger benefit. Currently we have bonus depreciation and other things that allow you to write those all off in 1 year. So the year that you buy that building and you do that cost segregation study, you get a very large write-off in the first year, and that helps save money on taxes as well. And if you're interested in more about cost segregation, we do have a video here on our channel about cost segregation, so you could find that and look at that. So that's how business owners can pay no tax in 2021, or pay no tax in any year, really. It just depends on having your expenses be greater than your income, and there's various ways to make that happen. Probably not very practical to have that happen every single year, because if you're constantly getting loans and putting it in the business, or constantly putting more cash in the business, eventually sometimes your cash runs out. Also, running losses in your business every year starts to get the attention of the IRS as well. So that is not really an advisable thing to do either. But from time to time, you can certainly make a large purchase in your business and help to save money on taxes. So yeah, if you like this video, please hit the like and subscribe buttons below.